In this video, we are going to talk about most popular dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. As the year 2020 began, it appeared that the long period of historically low interest rates was finally coming to an end. The pandemic, however, quickly threw a wrench in that plan, with the unemployment rate rising from 3.5% in February to 14.7% in April, and the Federal Reserve slashing interest rates to zero in March. Since March, the 10-year Treasury yield has been below 1%, leaving income investors with few appealing options once again. With that in mind, U.S. News has identified 15 of the best dividend stocks to invest in for 2021, with yields ranging from less than 2% to double digits. Here are a few of the best dividend-paying stocks to consider for the coming year. 10. Target Corp. Ticker: TGT. Target is at the top of the list. Although its dividend yield of 1.6% may be disappointing to most income investors, rest assured that it is the only one of the 15 picks yielding less than 2%. Target is coming off a strong year in which its stock continued to benefit from its renewed focus on digital sales, rising nearly 35% year-to-date through mid-December. Target announced a $7 billion multi-year investment plan in 2017 to become more digitally savvy, and those investments are already paying off handsomely. Comparable digital sales increased by 155% in the previous quarter. TGT's payout ratio, or the percentage of earnings used to pay its dividend, is low, at just 35%, indicating that the dividend is safe and has room to grow. 9. GREEF, GEF. GREEF, the smallest company on this list with a market capitalization of $2.3 billion, can add some mid-cap diversity to a dividend portfolio as the smallest company on the list. This is a slow grower, but with a 3.7% dividend and a price-earnings ratio of less than 18, it's a good buy, especially since analysts expect earnings per share, EPS, to grow 10% annually over the next 5 years. This manufacturer of steel and plastic drums, corrugated sheets, container liners, and other behind-the-scenes packaging products will see an increase in demand if and when the global economy recovers. GREEF's products are used by companies in a variety of industries, including pharmaceuticals, petroleum, food and beverage, and chemicals, to name a few. 8. AbbVie, AbbVie. AbbVie, the pharmaceutical behemoth, is a repeat pick in our roundup of the 15 best dividend stocks, having previously appeared on the list in 2020. With only a few trading weeks left in the year, AbbVie stock has already earned its superlative, having gained nearly 23% in the calendar year. AbbVie currently sells Humira, the world's highest-grossing blockbuster drug, which treats a variety of ailments such as arthritis, Crohn's disease, and plaque psoriasis, and has a market capitalization of more than $185 billion. The company's acquisition of Botox maker Allergan, which is expected to close in mid-2020, helps diversify its portfolio even more. AbbVie pays a 4.8% dividend, which is very attractive. Number 7. JP Morgan Chase & Co. JPM. The year 2020 was a down year for banks. Interest rates fell sharply, reducing the crucial spread between what a bank pays to borrow money and what it charges for loans. Even the most valuable bank in the United States, JP Morgan Chase & Co., with a market capitalization of around $365 billion, wasn't immune to the headwinds, falling about 13% year-to-date through mid-December. For patient investors looking for a safer asset with a decent yield, this is a good time to buy. JPM pays a 3% dividend and has a favorable payout ratio of 47% as one of the 30 members of the venerable Dow Jones Industrial Average. JP Morgan reported record revenue and net income in its wealth management division last quarter, as well as a 30% increase in trading revenue. Number 6. Johnson & Johnson, J&J. Johnson & Johnson is another of the few picks from 2020 that has been repeated on the list of best dividend stocks to buy for 2021. J&J's stock hasn't performed as well as AbbVie's in 2020, with a year-to-date gain of about 5% through mid-December. Johnson & Johnson, a blue-chip stock that has been a poster child for decades, is divided into 3 divisions: medical devices, consumer products, and pharmaceuticals. The consumer side of the business, which sells everything from Listerine and Tylenol to Pepsid and Band-Aids, is practically bulletproof and running smoothly. As hospitals cut back on surgeries due to the pandemic, the company's medical devices division suffered the most flaws this past year. This is expected to improve in the coming years, and J&J's pharmaceutical division was the fastest growing of the three segments in the fourth quarter. Quarterly stock buybacks have averaged $1.64 billion over the last 5 years, but only $595 million in the last 2, so J&J's EPS could grow that way again in 2021. Number 5. Iron Mountain, IRM. Iron Mountain is the first real estate investment trust, REIT, on this list, specializing in storage and information management services. According to the company, it stores and protects assets worth $18 billion from over 225,000 organizations around the world. Because IRM is a REIT, it is exempt from double taxation. It is required to distribute 90% of taxable income to its shareholders in exchange for not paying corporate taxes. Iron Mountain is a good choice for investors who want a steady income stream over significant growth potential. The stock is currently yielding 8.1% and trades in a relatively narrow range. Number 4. AT&T. Without mentioning AT&T, you can't talk about the country's major telecom behemoths. It not only owns a sprawling media empire that includes Warner Brothers, HBO, CNN, TBS, TNT, Cinemax, and DC Comics, but it is also the second largest telecom company in the United States, behind Verizon Communications, VZ. While AT&T will play a key role in the rollout of 5G technology, the company's unprecedented decision to stream all 17 of its 2021 theatrical releases simultaneously on its HBO Max platform, including Space Jam: A New Legacy, The Matrix 4, and The Many Saints of Newark, a prequel film to The Sopranos, should boost subscriber numbers. AT&T has a dividend yield of 6.8%. Number 3. Discover Financial Services, DFS. For the second year in a row, Discover Financial Services, a credit card company, ranks among the top 15 dividend stocks to buy. DFS is the smallest of the big 4 credit card companies, which include Visa, V, $433 billion, MasterCard, MA, $321 billion, and American Express, AXP, $96 billion, with a combined market capitalization of $25 billion. In some ways, this puts DFS in a better position than the other companies, as there is more market share to be gained. With more commerce moving online and away from cash, DFS also pays the highest dividend of these 4 companies, at 2.1%, and credit cards in general should continue to grow market share against other payment methods in 2021. DFS has a payout ratio of 54%. Number 2. PepsiCo, PEP. PepsiCo, the beverage and snack giant, is another of the best dividend stocks to buy in 2021, with impressive diversification across geographies and business segments. Pep's Frito-Lay North America division accounted for 26.6% of total revenue in the 36 weeks ending September 5, trailing only its PepsiCo Beverage North America segment, which accounted for 32.9%. Coca-Cola, KO biggest competitor, PepsiCo, Pep, lacks a strong food and snacks division. And, while Coca earnings colas per share fell by 33% last quarter, PepsiCo's grew by 10%. Pep pays a 2.8% dividend and is expected to grow by about 6% in 2020, compared to Co's 4% decline. Number 1. Cisco Systems, CSCO. Cisco, a blue-chip stock worth $186 billion and a Dow Jones Industrial Average component, pays a 3.3% dividend with a 57% payout ratio. Throughout the pandemic, the company has increased its dividend for 9 years in a row and has remained a cash cow. Operating cash flow increased by 14% year-over-year to $4.1 billion in the most recent quarter. Cisco also returned $2.3 billion to shareholders last quarter through stock buybacks and dividends. The communication equipment company, which essentially creates much of the plumbing that allows the internet to function, should be a long-term dividend stock. What do you think about our video? Are you planning to invest in a stock? Let us know in the comments below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.